Hey traders, in this video I want to talk about entry methods, specifically two, an aggressive and a conservative methodology. Now, there's different types of entries on those types of methods, and I'll explain what I'm talking about here in a minute. But more importantly is in a lot of trading rooms throughout the internet, and even in our live trading room in mistrade.info, we talk about styles. What's your style, okay? And you have to figure your style out, and you have to use this information and develop your own style. Well, that's true, okay, but the problem usually is people don't understand what is a style. Well, when we talk about styles, what we mean is what fits your psychological makeup. In other words, what are you an intraday trader? Are you a swing trader? Are you a position trader? What works for your makeup? A momentum intraday trader probably won't do very well as a swing trader or position trader because they just can't hold their positions long enough, and vice versa. The position trader won't be able to scalp or take smaller momentum positions because they want to hold on longer, and they're going to get stopped out before before the position even gets going because there's a lot of noise in that. So you have to identify that style, and based on that style you need to create your plan, and part of your plan is your entries. I think they're some of the most important things out there. Everybody says the exits are important, which they are, but if you have not identified your risk based on your entry, I don't think the exits matter at that time. Okay, so let's take a look at this. Let's look at two styles, aggressive and conservative. What I've done here, I went ahead and marked up this chart. It's a 60-minute chart, and this works on all time frames, gang. And so look for, based on your chart that you look for, what we call your anchor chart and your setup chart, this will work. Okay, so we've identified a sell zone. Again, this will work on the separate side or the opposite side, which would be the buy zone or the support area. This is just resistance. This is hypothetical, so please don't take a trade based on these numbers. This is strictly hypothetical and strictly educational. So we have this price that's moved up into this zone. Now again, whether it's a counter trend trade or whether this is a trend pullback, it doesn't matter. Okay, the entry style works on both methods. Okay, so here we have this sell zone. Price moves into the sell zone. All right, now most people go, okay, we've hit our sell zone. They get all excited and they don't know where to enter, and that's a problem. Okay, so what we do is we look at an aggressive style here. An aggressive style of trading will go ahead and take this trade at the bottom of this zone. Okay, they will say, okay, it's hit the zone, I'm entering. All right, and that's the bottom line, and they're in, and they've identified their risk up here. No need for any lower time frames. I don't need that stuff. I'm aggressive. I'm going to take the trade. Now they may also tear into this trade, and what that means is they may enter some at the bottom of the zone, the middle of the zone, and of course maybe even at the top of the zone, and getting an average price with their stops above. Now you may ask, well, isn't that adding to a loser? And no, it's not if it's defined. Okay, adding to a loser is when trade is just absolutely going crazy against you, and you just add because you want to. You're scared to get out of the trade. In this case, you have three defined planned entries and a planned stop, and it's within your risk parameters, and you've identified it. That is called a trade. That's not called adding to a loser. And please understand that, because that term and that is used not very well out in the education realms. We hear that, don't add to a loser, and I agree, you shouldn't add to a loser, but you can add to your trade plan if identified. All right, so the aggressive trader either enters at the bottom, the middle, or the top, and identifies the stop at the top. And you know what? They say, hey, Mr. Market, my stop's up here at the top, and you come and get me if I'm wrong. And if I'm wrong, I'll take the hit because I've identified my risk. If not, then you're going to pay me quite a bit of money. And in this case, it looks like it started pretty well for the aggressive entries. On the conservative side, all right, on the conservative side of things, what you're looking for is something to tell you that the sellers, or on the other side of the trade, the buyers have stepped in. All right, giving you some type of clue, or what we say the the market has tipped its hand and the sellers are coming in and we want to get involved with this market. And so what we would do is maybe move down to a lower time frame. And on this case, I'm going to use a 60 minute. If I was using a 60 minute, I may move down to a 5 minute to look for an entry. Okay, so let's quickly look at this. Price has moved into our zone, okay, at 27.47.25. All right, now I see that. I'm gonna go down and say I'm gonna start looking for entries on a 5 minute chart. All right, price moves up. You can see it touches right up here, that 47 area. And what's the one thing that everybody talks about in trading? The trend is your friend until it ends. Well, we're going to use a small trend line here to identify an entry. Okay, because we know that if a trend line's taken out, there's a good chance that there's stops down there and they're going to probably accelerate that move. All right, or the sellers that are coming into the marketplace are looking for that to happen to get involved in this market. So we drew this little trend line here after this has started to establish, and guess what? Here at point 1, the trend has broken. Now, the key here is to make sure that the trend is broken and the price closes below it. Once the price closes below it, then you have a valid actual entry. And you can see here at about 27.41 and a quarter, we finally got the close of the candle below it. Now, did it go straight down? No, actually it took some heat a little bit. All right, your stop then would be identified above this high. Now I'm not saying 1 or 2 ticks, I'm saying above it. So you may want to go 5 ticks, maybe even 10 ticks, because the high frequency trading in today's environment, those things are so smart. They'll look for your stops, and they may go up and take a couple ticks out above the highs and then roll the trade over and go back the other direction. So you want to be sure you're out of the way of that. Now the key here is your risk and reward good? Well, in this case, our stop is at 48 and a quarter or 3/4, let's say 49, and our entry is somewhere in the 41. So we have an 8-point stop. All right, in this case we have an 8-point stop. And if I look at my entries, I'm looking for targets way down here at 15 and targets down here at 26.86, and then I'm ultimately looking for this low to get taken out. So my risk reward is tremendous here. Okay, it's not a big deal to me if I get stopped out, because I know if I get this to move in my right direction, I can start to move my stops down and lock profits in, and this thing can be a great trade for me. All right, so that's one entry. The other entry would be, and it's one of my favorite entries, is when the price actually breaks the trend line and it pulls back to the trend line. I call this coming back. Price comes back to the scene of the crime to take one more look before it leaves. Okay, or some people say the price returns to the trend line to kiss it goodbye before it takes off. So number 2 would be the other entry. Now, albeit a better pricing one and a smaller risk, the targets are the same and the risk reward is tremendous here. All right, the last one would be as if we were to take out a most recent low. Okay, so let's take a look at that. So we have this low right here. Okay, and price moved down. You can see we have a high off of this low, we have a higher low, and then of course we have a higher low right here. Okay, and then once this low gets taken out, okay, you can see price came back to the trend line, it kissed it, it rolled over, it took out this low, and when it did, it had a little bit of momentum with it. When I watched the CCI, and it shows that we have some momentum in here. This is good momentum. Well, that tells me I probably want to get involved with this trade. Okay, so I could get involved again on the close of the candle, or I could wait for a pullback. You'll notice that the EMAs are also pointing down. That's also a good positive sign that there may be a high probability that this trade could work out for us. And of course, it started to work out. We don't know where it's going to go, but we've identified our risk up here again. So we have 3 different trade entries here on a conservative methodology. Excuse me, and we've identified our risk, and of course the risk compared to the reward here is tremendous. Okay, key, the risk to the reward is awesome. Okay, we have bigger reward than we do have risk. Now once we're in the trade, we just have to manage it. Okay, so let's quickly take a look at this. We have the aggressive side, which we can enter at the bottom of the zone. We could also enter some we could tear it off and enter some at the middle of the zone and the top of the zone, and our risk would be identified up here. The other style would be a conservative style. There's a lot of different ways of entering. You could enter on the trend line break. You could enter on the trend line break and pull back to the trend line. Okay, and then you could wait until that pullback actually takes out its most recent low. Okay, to make sure that the trend line is totally broken, or the trend is totally broken, because nothing's ever a perfect straight line in trading. Bottom line is that your risk is identified, okay, by your entry and where your most recent highs are, and of course your rewards, if you will, are identified by what we call your setup chart, which would be a higher time frame, and you would look for that. Now here at mistrade.info we look at profiles, okay, and we use those. I just actually want to use a 60-minute because I'm going to identify this sell zone. The sell zone could actually be a profile build out or a point of control. Again, style, that whatever your style is, whether it be intraday, swing trade, it could be a position trade, you could use EMAs, you could use a 60-minute candles, you could use the profile, a lot of different things. Regardless of that, know your entries, whether they're aggressive or conservative, identify your targets, and most importantly, identify your risks. So I hope this helps. If you want to ask questions or you have any questions, go ahead and leave comments at the bottom here. Be glad to get back with you. Take a visit to mistrade.info. Take a look at our videos there. If you're struggling trader, you want to learn a little bit more about entries and exits, and also how to use the profile, simplify your trade, go to mistrade.info. Register for a week trial. It's only $4.99. It'll be the best money you ever spent, and hopefully we'll be able to help you out. Otherwise, continued good trading, and we wish you well. Thanks.